Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Ooh, imagine this, $331.59 per ounce. This morning during the live show, I was explaining to people that over in SD Bullion, James does this report every few months just to show people something very interesting that should catch your attention and give you something to think about. So let's get into this. Before we get started, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold, silver, or any other precious metals, head on over to our friends at Money Metals Exchange. The link is down below in the description, or just type in www.moneymetals.com/Pimpy. If you make a purchase when you follow that link, you will automatically be entered for a chance to win 10 free silver ounces. So get started today, and hopefully your stack will start to look like this real soon. So head on over, tell them Pimpy sent you. You can follow me over on other platforms. I do have my own group over on Facebook called Pimpy's Investment Chat. Over here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. So head on over here and join us. It's free to do so. In here, I do post updates. If I should get on suspension from YouTube or get removed from YouTube and you want to know what happened to me, I'll let you know right here in this group. I can be found on Twitter, MeWe, YouTube, and the cool thing about YouTube, if you come over here and you join and you find my channel, I got videos going back, I believe, a couple years. So if you want to see some older videos that I have on Nasera, Jacera, gold, silver, cryptos, come on over here and join. Look me up and check out my videos. You can also find me on Odyssey. Catch me on Rumble. When I say that the links for all these are down below in the description, some of you don't know what I'm talking about. It's real simple. Just go down to the bottom right here of any of my videos. See this? This is the description. Hit show more. And there are all the links to all the platforms I just spoke about. So if you do want to head on over to Money Metals, just click it. And there you are. So come on over. Join us. I look forward to having you. So in case you're wondering, a lot of people were asking me about the live show today. Where is it posted? If you go to my channel, there are videos where it says live. Just click live. And there you go. I don't know why they don't put them over here with the other videos, but there's where the live shows are. Head on over there and you can hear this morning's show. Gold at the moment is at $1,955.30 an ounce. Silver's at $24.04 an ounce. But this is June, so are the Feds going to hike rates and be aggressive like they were? We'll soon see. If they don't, then I expect a nice little jump in both gold and silver, as well as other precious metals. We're going to hear James talk about something that's weird that happens when the COMEX closes. It'll impress you. But before we get there, you're going to hear other people talking about where gold's going to be, where silver's going to be. For me, I like keeping on a ratio. You can see right here, you need 80 ounces of silver just to get 1 ounce of gold. This ratio is way out of whack, way out of whack. You can see historically, it's been around 15 ounces to every one. So 15 ounces of silver for every 1 ounce of gold. That changed right when we got into the Civil War here, and it's been going haywire ever since. So if they're going to revalue gold and silver, which I anticipate here, then I'm expecting also the ratio between gold and silver to sit back to where its historical mark is, which is about 15 to 1. Obviously, I want to try to buy as many ounces of silver as possible. Earlier today when I did my live show, I told everybody that I would put this video out so you could see what I'm talking about. It's definitely interesting to hear what he has to say.
I'm probably going to name this video something like, I don't know, Silver Outside COMEX Hours, $331.59 an ounce in fiat USD from January 1st, 1970 to April 13, 2023. Yeah, through yesterday's aggregated price discovery data.
You hear that? That's what the average is after hours for the past 50 years. What do you say, around 331? Yeah, 331 an ounce. What the hell?
Instead, explicitly cite what the damning plus 53-year running silver price data shows to date. To remind anyone who dares to look.
So I can understand if there was a slight difference, but this is ridiculous. So they were very close up until around, 1985. Then all of a sudden it started going wacky. and there's a huge variance between the after hours versus when COMEX is open. Because this is about the price of silver right now. This is what it trades in after hours.
To do their own due diligence, that sub $50 an ounce silver bullion remains relatively cheap on a historical basis. Now give me 5, and bear with me as we do a whirlwind tour of what many analysts have been saying regarding both silver and gold on mainstream financial medias around the world this past week.
Why gold and not Bitcoin?
Because who's actually owning your Bitcoin? Who's controlling your wallet? Your gold you can actually have in your own pocket. You can actually take it out of a system. It's not electronically. If tomorrow morning, the grid goes down, you still own it. And it's been probably a safety aspect for, as long as history actually has been happening. And so I think there's a fair chance that actually history repeats itself to a certain degree. It's acceptable, particularly now in this larger brick settlement structure, where it actually becomes a very important saving tool.
Yeah. Russia just announced that they want to redo the system that calculates the values of gold and silver. They're tired of the way it's being handled now, that's been manipulated, and they want to know the true value of gold and silver. So if they can somehow come up with a way that would change how we view the value of gold and silver with transparency, this could be a huge game changer. So be very happy, hold on to gold and silver.
And all these participants have a huge chunk of it. So putting it to work to actually have a security in balancing or rebalancing your trade balances is actually the key issue on that.
And it has a monetary function in that respect, but when you're talking about gold, so how does this extrapolate out, because not everyone wants to invest for those same reasons into gold. Is silver going to catch those tailwinds? Are the other precious metals in the basket going to catch those tailwinds? Or is it specifically in your view that it's gold where you should be positioning?
From a central bank point of view, it's going to be gold because it's the only thing which is big enough to actually change the structure of a big asset allocator. A larger fund could actually clear tomorrow morning the silver pool, right? And if you look at the LME, basically, the LME has what for most metals, 2 days delivery. Who wants to deal with somebody who's got 2 days delivery function? So you're actually going to see that the market becomes much more physical, and that means actually all commodities actually look good, particularly silver, which actually is trading historically on such a beaten down level in an environment where it's been in backwardation for as long as I can see. I think it's going to be ready for a massive move as it starts finding interest.
What is your price target? What are your expectations for gold this year, and what are the factors leading you to this conclusion?
Right. So, we're pretty constructive even at these levels. It's done a lot of mileage. It's $130 up in the last few months. There's just a lot of things coming towards gold. You've got this inflation underpinning, which has been an issue for the past 8 months. We have recession fears. And then within the past 2 months, we've seen a bit of a game changer with the fact that you've got a banking crisis that the Fed has had to backstop and start expanding their balance sheet.
Remember, central banks around the world every year keep breaking the record from the year before on the amount of gold they've been purchasing. So like I say, do as they say, not as they do. If they are stacking up on gold, you should as well.
All of that is playing into gold prices. We do see pricing hitting all-time highs in the short term. But ultimately, gold is a scorecard on how well the Fed lands this. And if the Fed cannot do a good enough job, we do see gold getting up to 2,500.
Well, I think they're having a hard time dealing with inflation. Even though they're hiking the rates over and over and over, sure, they brought it down a little bit, but it doesn't seem to be having the effect that the Fed was hoping. If that's the case, then hiking rates are not helping out the situation. That would put this government and the Federal Reserve in a very bad light. They don't have the money to cover the debt that's on their books. If the Federal Reserve or any other company out there right now, they would be, the doors would be closed. They'd be done. They'd be over with.
2,500. Okay, that's a big jump from where we're at right now at 2014 right now. So right now we're also showing the likelihood of a Fed rate hike. So give us a sense. We have the potential recession on one side. We have the Fed potentially hiking rates on the other side. How does that impact the gold market?
So there, this idea that the Fed is handcuffed, it's got inflation, it's got financial instability risks, and then it's got a recession. And we don't think that it's going to be able to solve all three. And that's why gold comes into play, because of the increased uncertainty around all these three factors. That is a core driver behind pricing.
Remember when Trump was in office and recently with Biden, the Treasury was talking about minting a coin that would be worth $1 trillion that would help the feds with their books. Well, if they're considering creating a coin, one coin, to help with the debt, and we know that's unrealistic, what is realistic is the revaluation of gold and silver. That's more likely to happen than the $1 trillion freaking coin.
I want to circle back to that 2,500 price target. Again, just really quick for everybody listening, what would be the potential setup for us to reach 2,500 an ounce in the gold market?
You've got to look back to 2008, and gold there doubled, went from 800 to 1,900 in the space of 18 months. And so if we see the fact that harder landing risks rise, and the Fed really having to forego inflation and start ramping up this balance sheet, we could see gold take off again.
The spot silver price in fiat Fed note terms closed safely above 25 per troy ounce, while it briefly cleared 26 an ounce intra-week. The 26 per ounce price is to me a key psychological long-term level, with only relatively brief durations during this full fiat currency era when silver sprang above that threshold. We are super close yet again. And back to this week's 5-day trading chart. The spot gold price in fiat Fed note terms ramped and threatened the now nominal price high of roughly $2,070 an ounce gold, but it backed off and sold off to close the week safely above the key 2,000 ounce price consolidation line. The spot gold-silver ratio keeps falling slowly, closing at 79 in spot price gold divided by spot price silver division. The chart here starts January 1st, 1970, with this silver price of $1.92.5 per troy ounce silver, and it aggregates all throughout the COMEX futures market era, with silver price trading data over the last more than 53 years. Basically, all the spikes upward were bullish eras for silver spot prices, but in total, the COMEX silver futures price has added up to trade downwards over this entire era to now 15 cents an ounce aggregated. The COMEX silver futures market is a cesspool, slanted to the short side, winning generally. But there are times and eras where those cut short silver get their faces ripped off and many end in bankruptcy and or bailouts. My strong suggestion is we're gearing up for another one of those cycles to come. Here's how this stupefying full silver COMEX era chart looks when you leave it next to the ongoing red silver spot price line over the last plus 53 years. Yeah, but wait, it gets even crazier when we look outside COMEX silver futures trading hours. Now we add on top the blue line here, which is the silver prices trading action outside COMEX silver futures trading hours, basically the Eastern world's silver buying price action. You can see that once COVID 2020 came along with infinite QE policies running globally, the Eastern silver price action ran up a wall to the tune of now over 331 an ounce aggregated data over the last 53 plus years running.
So you can see right here, the New York silver opened last at $25.63, but overnight last $331.59. And that's the average over the last 50 years. That's what price action looks like when the COMEX isn't there screwing people over.
The red line is the global fiat US dollar quoted silver spot price ongoing. The black line is the persistently short-rigged COMEX silver spot price, which I noted is turning flat of late. That, in my mind, is a bullish sign. And finally on top, the blue Eastern world silver spot price aggregated data running beyond now 330 an ounce. And I maintain we are headed for the fifth era when the red spot price line has a meeting again with the blue Eastern price line. When, how, and what nominal price they collide again, impossible to say. What I can say is that in real value terms, when that comes to pass, silver in real valuation levels is going to buy a hell of a lot more in asset classes and real goods/services than it does today.
Look, over the last 15 years, they've been using a lot of hocus pocus, manipulate, lie on the data, do whatever it takes to discourage people from moving into precious metals. Why? Because when you do that and people see a rush of precious metals, there's a perception that the economy is going to be bad. That's why you have the feds out there saying, no, man, everything is good. The economy is good. Go out there and invest in stocks, the whole 9 yards, while they're buying record amounts of gold. Like I say, do as they do, not as they say. You should do the same thing. take advantage of the low price and continue to add silver. Silver definitely is the way to start moving. And I'm anticipating another run on silver within the next 6 to 7 weeks here. So I'm going to keep an eye on it. But just like that time we had the price run all the way up, I'm anticipating that happening again right sometime in July. That's just my opinion. But I definitely am storing up more on silver. Anyways, that's it for now. I appreciate you guys tuning in, and I will catch you later. I'm out.